Realized gains and recognized gains, and realized losses and recognized losses, are distinct. Realized gain versus recognized gain. Realized gain is a result of selling an asset for more than its adjusted basis, the original cost minus any depreciation. The profit you make from the sale is the exact sum. The portion of the realized gain that is taxable income is known as recognized gain. Tax rules and deferrals prevent all realized gains from being recognized immediately. Realized loss versus recognized loss. When you sell an asset for less than its adjusted basis, you experience a loss. The actual loss you encounter from the sale is what it is. This means the tax portion of the realized loss that is recognized. It's common for recognized losses to be offset by recognized gains, which can reduce your taxable income. The recognition of loss in a given tax year is limited and regulated. To put it simply, realized gains and losses are the actual profits or losses obtained from the sale of assets. Those profits or losses that are reported for tax purposes are the recognized gains or losses. Remember the notes below when calculating gain or loss. Creating an operating agreement is highly recommended for both profit-making and non-profit entities. In addition, when registering with the IRS and state, it is important to include the operating agreement with the article you are registering for. If you modify the operating agreement, it must be reported to the state and IRS as an amendment. Remember the notes below when calculating gain or loss. Number 1, the IRS prohibits the recognition of losses on personal use property. Number 2, adjustments are made to basis for tax-related events including changes that prolong life and depreciation, resulting in the adjusted basis. When expenses related to a property are not deductible in the current period, the costs are added to the property's adjusted basis. Depreciation is how taxpayers deduct the costs of capitalized property used in a trade or business. Depreciation is an ordinary deduction, meaning that it is offset against income without restriction. Number 3, long-term capital gains and losses are subject to a different tax rate for individuals than ordinary income. Thank you and God bless you.